Welcome back into the show. Let us talk commods, and as a backdrop story to it all, the energy price as it appears on screen for you there. North Sea Brent under a little bit of pressure, but NYMEX light sweet, as you can see, swinging in the other direction, and that tropical storm Harvey moving inland, and that's been a trigger for gasoline prices to fall because, well, essentially refineries are back in play. Pete McGuire from XM.com, live with the very latest. Welcome into the show, Pete. So, of course, that's been the story of the week, and rightly so, the hurricane connection, as it would be. But look a little further into the distance in terms of even the crack spread. Can we divine anything from the trade there?
Well, good afternoon.
Yeah,
Yes, well, good afternoon, Carson. Certainly when you look at gasoline, and they were at really quite surprising numbers this time last week, we really saw it run up very, very strongly, nearly at 2.5-year highs. It's come back a little bit over that time. As far as crude, you saw Brent rise, but WTI still floundering in that $46 to $48 handle. It's very much range bound, and then you run distillates through there and so on. So, yeah, it's an interesting trade at the moment, but there doesn't seem to be a lot of momentum to the upside or downside, Carson.
I mean, what gives it sort of as past sort of events, and you've got to put the geopolitics now into it as well, because now we're talking about a China play on North Korea holding the purse strings and as much as the taps to turn on or off for energy. So what might that do potentially, or is that a separately run event?
Well, I think possibly a separately run event, but then again, we're just not sure, you know, what the leader's agenda is, and it seems to be ratcheting up as each week passes by. They're only consuming about 15,000 barrels a day. 90% of their trade is coming from China as far as food and fuel. So from a strategic standpoint, China certainly doesn't want to disrupt anything there. They haven't really tried to do anything since the Korean War. Japan's now saying, well, why aren't we seeing sanctions there or cutting oil supply? But I'm not sure whether China wants to play down that pathway. So it's going to be interesting how it plays out over the next couple of days. And let's just see, there's talk of a bomb coming to on the coast there to another launch.
Yeah, well, okay, as that talk intensifies, we have come off from an Australian dollar perspective, 1 month highs where we were just 3 bips away from 80 US cents.
Yeah.
Now we've lost about 20 in the event. I'm just wondering how much of a barometer you're judging this one to be right now, just given the complicating Fed connection to the Australian dollar move.
Well, we came out this afternoon and said we weren't going to see any rate rises. I think the Fed's probably doing similar as far as Yellen's perspective from post-Jackson Hole. There's no talk there really that we're going to see a rate rise for the rest of this year. We've got, the Fed's got their hands full, and, well, more importantly, US government as far as debt ceilings about, I think, the 29th of September. And in turn, the US dollar's sitting at around that 92.5 as far as the basket for that dollar index. And we've seen great move upwards from a precious metal perspective, and, of course, those geopolitics playing into that.
Well, I mean, and those net longs for bullion are quite remarkable. Looking at the stats, you're kind of on a hiding to nothing if you're on the short side of that trade.
Absolutely, 19 to 1. So for every short position, you've got 19 long, and then you've got the ETFs. I think they're up around about 3% there, the gold-backed securities, exchange-traded funds, since about this time last month. So that's about the 8th of August, up 3%, which is a fairly healthy number.
Yeah. Are we surprised that industrial metals are feeling the halo effect as well? Because if we're bracing for some kind of a geopolitical implosion, worst case, the growth profile would not justify the growth expectations that are being bid up, that are seeing these industrial metals bid up.
Well, they're certainly getting bid up. I mean, have a look at what's happened as far as copper, up about a 1.5% or 1.3 odd last night. You saw zinc well up, and you saw nickel at, multi-year highs. So all of them were pretty well sold off. But when you look at a copper market, you put a graph up on that one, it really is quite dramatic what we've seen in that last couple of years. Really moved up from 4,400 now to nearly 7,000 a metric tonne, and that's taken all of the other metals up with it. So it's a great barometer, and it's just a realisation that I think from a demand picture, it hasn't really backed off, and it's quite nice for traders.
And John, exposure from a kind of a listed perspective now, John Milroy, the dust settles on an Oz Minerals result, put alongside BHP. you know, you default to the latter over the former? If so, why so?
Yeah, look, I have to say that BHP is probably the preference, but you know, it's a struck match between that and you know, Rio always. Balance sheets are in, you know, rude health. We still think, you know, both have got the ability to have some capital management upcoming, but Pete didn't touch on manganese, and you look at what, you know, came out of the South 32 result, and you know, that was certainly benefiting to a great extent, Pete, wasn't it, from that, you know, another industrial metal that's you know, certainly you know, been in the limelight, hasn't it?
Absolutely, John. I mean, all of them have had really nice run-ups. There's a fair bit of momentum there. Traders are certainly bidding it up. US dollar weakness, and that's really just catapulting it all the way across to silver and, of course, a lot of the other precious metals. So it's been a nice run-up over the last matter of weeks, and that may continue. Let's just see as far as the demand coming out of China and what's going on from a global picture. Don't forget, you know, the infrastructure spend and what Trump's trying to achieve, all of that rolls into the, you know, the melting pot. And there's no doubt you could see, you know, that copper market, you know, 7,500 a metric tonne would be fair value, I'd say.
Well, that's right. I mean, you've seen these fundamentals, you know, drivers like the US reporting season. Again, you know, the US economy looks like it's in rude health, you know, notwithstanding you know, what's happening on the global and global front, of course, and China, as you mentioned, and also Europe too. You know, still ticking along pretty well, and you know, it's really shooting the lights out at 2% GDP growth, of course, but those drivers look like they're intact, don't they, Pete? Not just the trading action.
Well, that's exactly right, John. And then you look at, you know, emerging markets and have a look where the likes of the Vietnams and Southeast Asia, strong demand there, growth. Construction, you know, it's a big, wide, wonderful world out there, and there's a lot of cranes and there's a lot of construction, and I don't think really the storyline's changing. You know, growth across all of Africa, and then you roll that across to the likes of South America, huge demand, and you know, so it's not unusual to see these sort of events. The super cycle hasn't waned too much. It's probably come up a little bit, but we've got a lot more people entering the market. And of course, electricity demand, everything is just being bid up, and so I think it's, you know, it's not a bad place to be at the moment.
We got to take, unfortunately, we've got to call time on this. Could go on and on, but we are having to call into proceedings. And thank you, Pete, as always. XM.com.
Thank you, Carson.
Chief Exec, Pete McGuire, out of the Sydney CBD studio. And indeed, John Milroy from Aldermanette. Thanking you, John.
Thank you.
Remaining on for your final count, which comes up in just a moment. But before we go any further, a programming note approaching thick and fast. The Governor himself tonight speaking. That is the RBA Board dinner in Brisbane tonight. So he's been on a jet plane from Martin Place to get there in time for 7:15. And we will be taking it exclusively live for you on that basis. Well, coming up after the break, it is your final count, the Tuesday edition. That means Henry Jennings from Marcus Today joining us out of Melbourne tonight. We'll have Peter Switzer along and John too, and we'll look forward to your company.